In this video, I will share with you how I would generate 20% per year in the stock market if I had to start again from scratch. My name is Christophe Nour and I've been investing in the stock market for almost a decade now with a performance of 25% per year. And I have used the same formula for almost a decade and it has generated a good performance. So I'm telling you, if you want to build the portfolio of your dream and have some great performance, please watch this video. Okay, let's start with the beginning. Let me put my face here. If you want to make 20% per year, this is a simple formula that you can use regardless of your risk reward, appetite for risk. So that's fine. The first thing is to build a portfolio, right? How do you build your portfolio? Let me put build B, the portfolio P. Okay. To build a portfolio, you have certain rules. First, you have to know yourself. Do you enjoy risk? Do you enjoy volatility or not? If you are a stressed person, you will focus on safe stocks. If you are, a young person, you are below 60 years old, sorry for the older generation, but if we are below 60 years old, you can take more risk. You have time with you. So you can enjoy more risk, high reward scenarios. So that would be a good starting point. Second point, know yourself. What are you good at? What industry are you in? Do you enjoy the golf? Do you enjoy the surf? Do you enjoy the basketball? Are you an aircraft engineer or are you a doctor? It depends. And all this knowing yourself stuff will impact your circle of competence. You have a rule from Warren Buffett who says that you only have to invest in your core expertise, in your core areas where you are really familiar with the matter. So if you have been playing the golf for 20 years, you know more than average regarding this industry. You know the type of fields, you know how the industry works, you know the recurring payment you have to pay to stay within the club. That's an area you're familiar with. If you are a fan of music, you maybe know Apple Music, Spotify, you know how recurring the payments are, you know how to select, you know the competitive advantage, you know which one is the best, Spotify is the best, Apple Music is the best, you name it. If you have been playing video games, you know more about the games. You have countless examples. So first, you know yourself. Where do you have an edge? In which industries? And now, since you know your circle of competence, you can invest and find some great investments in this field because you know more than average. You know more than the Wall Street people. You know more than the average media, CNBC television, analysts on Wall Street that have not played golf for 20 years. So you have an edge. So how do you build a portfolio? Focus on one industry where you are good at, and I will show you the second step. So that's step one. Build a portfolio thanks to your circle of competence. How do we build a portfolio? Step two, it's the screener. Let me put a S for screener. I use FinChat to screen idea. What is a screener? That's a website where you select some criteria, some metrics, revenue growth, profitability, and the internet will do that for you. It will search ideas for you. So if you want to invest in profitable companies, you make high margin as a criteria. If you invest in companies that grow, you put revenue growth, earnings per share growth. So for the screener, I would recommend you focus on specific metrics. First, you want EPS growth. I would focus on EPS growth. I want the EPS growth to be higher than 15% for the past 5 years, for the next 5 years. You get the idea. You want businesses that grow profitably and grow their earnings per share, because at the end of the day, in the long term, stock prices will follow earnings per share. So if earnings per share grow, stock prices will grow. So I want to only focus, if I had to make like 20% per year, I would focus on these companies that grow their earnings per share more than 15% per year. And you can also select another criteria that I like a lot and I teach my students to use it all the time. You have a ROIC. I would say above 10%. You can go a little bit above 15%. You want the ROIC, the return on invested capital. It's a measure for efficiency, right? You want the efficiency measure to be above 15% for the past 5 years, 10 years. You can use several websites for that. You can have either a stable ROIC that is at 15 like for the past 10 years, or even better, a growing ROIC. Now we are talking efficiency improving, margins improving, profitability improving. The ROIC may start in, 2015 at 15%, and then it goes up to 18%, 20%, 21, 22, 25, and now we are talking about a very efficient business. That's how I would build the portfolio to reach 20% per year. And the other metric I would choose is the valuation. So PE ratio must be below 20. That's a measure that will disqualify expensive businesses, expensive stocks. Because the goal of my portfolio, if I want to make 20% per year, is to invest in profitable companies, growing companies, efficient companies. So that's profitable, efficient, and cheap. You want cheap companies. I would want to avoid mistakes. And how do you make a stupid mistake? You buy expensive stocks and you hope for the best. I don't want faith. I don't want hope for my business. I want to be so sure of my businesses inside my circle of competence. I've done the work. I know that they have been profitable in the past. I want them to be bought at a cheap price. This will drive performance. Because on average, these businesses make 20% per year or even more, maybe 20% per year. It depends on the valuation, starting point, etc. I have found some examples of this. For example, you have one of my biggest companies, one of my biggest performance was Williams-Sonoma. Williams-Sonoma, retailer in the US. If you want to check after this video, the ticker symbol is WSM, 3 letters. And I bought this company in 2021, 2022 with a PE ratio of 7. It was a very efficient business model and EPS was growing. The earnings per share were growing. PE of 7. So very cheap. And the stock tripled and I sold the position. A quick triple. So these opportunities are here. Don't think that it's very hard. Sometimes you just need key criteria, be patient, and when you have an opportunity, you swing. That's it. You hit the ball and that's how it's working. So you have opportunities. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. You have the portfolio, you have the screener, you have the circle of competence. You focus on high quality stocks. Something that is very important as a step 3 is to dismiss investment ideas that you don't like. Dismiss bad businesses and dismiss companies you are not comfortable with. So at the end of this big tunnel, you will get profitable companies, high quality businesses. The third step of the analysis is to only focus on high quality names. So that's a qualitative research I would do to reach 20% per year. So I would focus on the metrics first because I want the financials to be extremely good. I want the balance sheet to be good. You can add another criteria here. I want to avoid companies with a lot of debt, but that's okay. That's a minor criteria. I want to focus on high quality businesses. I want to invest in companies that have a moat. A moat means a competitive advantage. It means that the companies are better than the average company. Better, higher margins, higher ROIC than average. So I want high quality, high quality. Let me put a Q here. High quality companies. Companies that focus on the long term. Companies with a lot of management vision, strong culture for the future, like Costco, for example. You want to invest in high quality companies with high insider ownership. You want the CEO to own a lot of shares. High quality businesses mean you want a lot of growth in the future. So good growth opportunities. And you see in this video, you have a lot of metrics. Like you build your portfolio, screener, profitable, margins, ROIC, valuation, growth initiatives, management. You gather all these 10, 15 criteria, and you have the perfect formula to reach 20% per year. So since now with all this stuff, you can build a portfolio, I would focus on, if you do a screener of all of this, based on the quantitative metrics, you can find maybe 100 companies that fit these criteria. Out of 100 companies, inside your circle of competence, you will find maybe 10 companies that you really understand. Out of 10 companies, you can already build a portfolio. And if you build a portfolio like this, I would focus on the long term. Don't trim after 3 months. Don't buy and then wait after 2 months and then sell. No. If I want to build a 20% annual return for the next 3 years, I want to buy the stocks cheap and I want to wait. Patience is my best asset. So I want to take advantage of it, let them grow, be profitable. Because normally, if I have done the work, I know that the track record is great, the management is great, they have a clear vision, they have growth initiatives, they have a high profitability, they have a moat, so they will be better than competition. So if the industry grows, they will grow better, they will grow more than the average. So these are all the elements you need. Frankly, that's all you need. You don't need to have a complex formula. You don't need much hedging. You don't need the option trading. There is a simple formula that can generate 20% per year. And I've done it. I've done it with 25% per year. So that's what I do all day long, and I can tell you it works. So this is exactly how I would build a portfolio to generate 20% per year. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.